In this video, I'm going to share the biggest mistake I've made with Apple stock when I bought it in 2018, and something pretty interesting happened after. And I made a pretty big mistake with this company. I learned a lot of lessons from it on how to treat different stocks, on when to actually sell, and a lot of things to actually look into that I believe is going to be very helpful to a lot of you that are watching this channel, especially to new investors, so you don't lose money or miss on a lot of upside like I did with many different stocks. And I always try to do these videos to share my mistakes and try to help others, as I already made those mistakes, already lost money or missed out on a lot of money with it specific stocks. So I think this is, better to learn from other people's mistakes than your own mistakes. Now, some of you were investing in 2018. Actually, it wasn't too long ago, around 5 years ago, we had the Fed tightening. Many of you remember that. It's kind of what happened in 2022, except 2022 was way more aggressive, but they were tightening in 2018. Early 2019, they were doing some QT, they were hiking rates a little bit. Jerome Powell did not want to cut rates. Donald Trump was pressuring him on cutting rates. He didn't want to do it, and there was a whole kind of debate between this whole thing, and the market pretty much freaked out, and we had a fast and steep sell-off in late 2018, October, pretty much November, December 2018, especially in the large and the mega cap stocks. Apple, Google, Amazon, a lot of them went down a lot. But if you look at Apple, it went from around $58 on a split adjusted basis to as low as $35 in pretty much 2 to 3 months. It was a very fast sell-off. If you look at the PE ratio of where Apple was trading at, it went as low as 12 times earnings. 12 times earnings for Apple in 2018. Most people don't believe that, which is why sometimes I look at 32 and 35 times earnings for Apple. I'm like, that's too much. A few years ago, it used to trade at 12 times earnings. And most people actually don't believe that. And I do believe that, I do remember that, because I actually bought Apple around 15 or 16 times earnings, somewhere around here. This is when I bought Apple around November 2018. I remember, it was 15 or 16 times earnings. To me, it looked very obvious. Apple is an amazing company, high quality company. It had an amazing balance sheet. It had a great future. It had a great product. It was very, very undervalued. The market was freaking out. There was very bad sentiment, which I do like bad sentiment, especially when it's not related to something with the company. Maybe it's some kind of president said something, or something with the Fed, or something, something not with the company itself. If the fundamentals are intact, but the stock is going down, this is when I'm normally very, very interested. And this is why I was interested in Apple specifically in 2018. And I did buy a decent stake in Apple, and I dollar cost average down. And then pretty much the market rebounded very quickly. And in 2019, actually around October of 2019, 1 year later, I was up around 24 or 25% on Apple. I don't remember very well, but it was something 25, 24%, something in this range. So I looked at Apple, I looked at the PE ratio, it has rebounded. I looked at the fundamentals, they were still great. But to me, Apple was starting to look a little bit overpriced, a little bit overvalued from where I bought it at. And I was up over 25% in just 1 year, which was an amazing return. So I decided to sell Apple in October of 2019. And after I sold Apple, most of you know what happened. The stock went up 200% to $181, especially if you look at where I actually bought it at. Apple is up pretty close to 300% from where I bought it at. And I missed on a lot of upside owning a high quality, amazing company like Apple, yet I decided to sell Apple, and takes that 24%, I could have got over 300%. Now, a lot of you might ask me, why would you sell Apple? You bought it at 15 times earnings. It was a lot of fear, an amazing company. Why would you sell Apple around 19 or 20 times earnings? Why would you do that? And this is a mistake that I made a lot, but the biggest one was with Apple. And this is something from The Intelligent Investor that's written by Benjamin Graham. This is one of my favorite books. Most of you actually know the book. A lot of people talk about it. And what Benjamin Graham used to do back in the day, he used to buy these $50 for 50 cents. You buy a company when it's undervalued. Once it gets to fairly valued or overvalued, you sell it, and then you take the money and then you move to another kind of company that's trading at 50 cents and you do the same thing. For me, Apple was the 50 cents on the dollar. I knew Apple was undervalued. I knew it was just undervalued. It was an amazing company. It was trading at a discount. But then I let the price influence me and the stock went up too quickly. It got fairly valued. So what did I do? I ignored the long-term fundamentals and the long-term potential, and I decided to sell Apple to move into something else. And this has been a winning strategy for me. This is pretty much the only strategy that I used for years and years before 2018. I bought a lot of companies that people didn't like. Even in 2020, I bought a lot of the growth stocks, unprofitable growth stocks. I made up to 500%. I talked about it in one of my videos. You could watch it. I can put the link over here. And I did a lot of other things. I bought companies with high debt. I bought gold miners. I bought oil stocks, coal stocks, radio stocks, a lot of any stock that people pretty much didn't want. Even the mega caps in 2022, I bought Google at $84 per share. So any kind of company, any industry that people don't want, this is when I'm interested. And once the value gets realized, this is when I sell and I move on. But the biggest mistake that I made is I actually treated all companies the same way. I should not have treated Apple the same way I would treat Intel, or I would treat something like GameStop or some kind of company with bad fundamentals and very high debt. This is the biggest mistake that I made. I should not have treated Apple like a cigar butt kind of stock, and this is how I learned that once I find a high quality company or any company that the fundamentals are actually improving and has long-term potential, I don't care how much the stock is actually up. I am not going to sell this investment as long as the value keeps growing. This is the mistake that I made. I paid attention to the price. The price influenced my decision, but I was not focused on the value, and the value was actually growing. And now this is pretty much what I learned, and I'm implementing what I learned in everything that I do. For example, I have a microcap stock that's up over 100% in 4 months. And there's a lot of things that's changed. The fundamentals got much better. There's a new CEO that came in. Gross margins went from 11% to around 23 or 24%. So a lot of things have improved, which warrants the 100% on the upside. Now I'm up over 100% in 4 months. But guess what? This time I am not selling it because the company still has a lot of potential. It could become a billion-dollar company. It's profitable. 40% is owned by the managers and the insiders, which would give a lot of margin of safety and skin in the game. So I am not selling such investments, and I have a lot of them that I'm not selling. I don't care if I'm up 20%, 50%, or 100%. And as long as the long-term prospects are intact, and as long as the value is growing within these kind of companies, I should not be selling them. I don't care how much they are up. And this is the biggest mistake that I made with Apple. I treated Apple like I would read something like Walgreens or something like Intel. These kind of stocks are not buy and hold forever. These are stocks you buy on bad sentiment, on what is extremely undervalued. Once they get to fair value, you sell them and then you move on. But you don't do that with companies like Apple, companies like Google, even Nvidia. Someone in my own investment group bought Nvidia, I believe it was $50, and it was at 150 or 200. And he asked me, should I sell Nvidia? I said, don't sell it, even though it's up so much. But the value did grow within Nvidia. But he sold it, and now Nvidia is trading, I don't know, $400 per share or something crazy. So this is a mistake that most of us keep making. We let the price influence us of how much we're up. We are worried on missing out on whatever we made, that if the company and the stock reverses, then our gains will be lost. This is not what we should focus on. We should focus on the value within Apple, within the companies that are growing. And as long as the value is growing, there's no reason for you to sell this investment, just to take profits or to trim it because it's getting too big. This is something I learned the hard way, and I hope this video was helpful to a lot of you. I hope you learned something, and I hope you're not going to repeat the same mistake I did. So thank you for watching this video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.